Singapore's economy is on course to be better than it was before the pandemic. The central bank says that it will slow next year, but will still see an above-trend growth. Analysts say that this means a growth of between 3 and 5%, barring risks such as a resurgence of COVID-19 infections. Observers are also warning of rising inflation. Brandon Tunoto with more.
Domestic-oriented and travel-related sectors should see gradual improvements with the country's progressive reopening and lifting of border restrictions. That's according to the Monetary Authority of Singapore's assessment in its latest half-yearly review. It says a global economic recovery would stir higher external demand, which would boost Singapore's trade-related and manufacturing sectors. However, MAS warns that the construction sector's recovery will still be hampered by higher material costs and manpower shortages for the rest of the year and into 2022. An economist says the uneven recovery across sectors will have an impact on salaries.
We will see sectors that are seeing very rapid wage growth because those sectors are doing fairly well and that they are struggling with severe manpower crunch. But we are seeing sectors that have continued to struggle, and henceforth wage growth in those sectors will continue to lag behind.
Consumer prices are also expected to increase as more locals return to the workforce and have more spending power.
Consumer prices will likely rise further as the economy reopens and consumer confidence returns. Most of the price increases that we have seen so far have mainly been driven by increased prices in cars, housing rentals, as well as electricity costs. For instance, air transport costs could also continue to rise because of the increase in demand for airfares when people can travel again.
Economists also point out that the planned goods and services tax hike from 7 to 9% will hit the pockets of consumers.
There is a high chance that the GST may be introduced in 2022. The impact will be felt towards the tail end of 2022 and into 2023.
Prices of energy and food commodities are also set to rise due to a global energy crunch. Supply chain bottlenecks have also caused shipment delays, driving up freight costs. There are also other risks, such as China's economic slowdown. It may have an impact as it is Singapore's largest trading partner. But the central bank says with Singapore's diversified trading partners, it won't be affected by global supply chain disruptions. MAS has kept its forecast for this year's growth at between 6 and 7%.